Affle is one of the bigger gainers today, up around 2.5% off highs, but Citi's initiated coverage on the stock with a buy rating. Target price was 1,600 rupees a piece, expecting it to outperform growth in the digital advertising industry.
Godrej Consumer sees profit booking after a sharp up move yesterday. The company's business update indicates double-digit constant currency growth in the first quarter.
Mahanagar Gas hikes CNG prices by ₹1.50 per kg and PNG prices by ₹1 per standard cubic meter. CLSA also issues a bullish note on city gas distributors. Those stocks too still in the green, off highs.
Concor corrects as volume growth misses guidance. The export-import volumes grow by 3.3% in the first quarter of the year, well under the guided growth of mid-teens for FY25.
Emami surges as Citi hikes its target price to 900 rupees from 625 after a strong summer portfolio and expectations of an above-normal monsoon.
Hello and welcome to Chartbusters. I'm Nigel D'Souza. Joining me as always is Mangalam Malu. And as you can see to the top of the screen, all the indices are well in the green as we speak. So it's a good start to trade. The 24,450 mark remains elusive, but at least the start of the green. And a couple of big names like ITC are firing this morning. Hey, Mangalam.
Hi, Nigel. You know, the underperformers coming back to the party.
Absolutely.
Perhaps ITC doing extremely well. For the last few trading sessions, we saw some weakness in HDFC Bank as well. That too has recovered. Let's see whether this recovery continues well past the 20-day moving average on the stock or not as well. But from the broader markets, we are seeing some traction in a couple of these names. So something like a Nippon Life Insurance should come up for you. A big up move is what we've seen, more so in the last 5 minutes or so. It's a vertical rise that we've seen on Nippon Life. And while tea stocks have been doing well, maybe some of them are saying add sugar to my tea, because we have Balrampur Chini, which has spiked as well and has moved to the high point of trade. So it'll be very interesting to see where these sugar stocks go from here as well, because typically these move in tandem with all the sector itself. So that's about a couple of stocks which are on the up. On the way down though, BHEL, NBCC, NCC, PFC, REC, a lot of these PSUs are taking some profits home as well. So good time to get in a market check. Shilpa Rao joins in with a quick technical check. Shilpa, we've been in a bit of a range right now. Today, it's the milder green side of the range as against the mild red that we saw yesterday. Where do you think this range goes from here, or does it stay the way it is?
Good morning, Nigel and Mangalam, and thank you for having me on the show. Talking about the range, yes, we see that 24,000 is actually very well defended. In fact, you can actually level up also, and 24,200 is also acting as a good support. So as long as we are holding this 24,000 to 24,200, I believe the trend on the upside is quite intact for levels of 24,500 to 24,800. But below that, yes, of course, we will see some caution happening. FIS data also still at net longs at 84% is little worrisome, but since we don't see any sort of long unwinding happening from their end, so till then it is quite fine. We can see 24,500 and above levels coming in. Bank Nifty is consolidating again very beautifully, with 52,000 as a support, and as long as we are holding this, we can always expect that run up towards 52,800 to 53,000 mark again happening.
Okay, all right. Hi, good morning, Shilpa, and thanks a lot for joining in. Give us your individual stocks as well.
I have two buys, Nigel. The first one would be in Alchem. Alchem is showing a lot of strength since yesterday. The diagnostic space is also doing well. Stock is just approaching 5,300 mark. In futures, it is around 53.15. So I believe it has a potential to see 53.80 to 5400 zones also probably in a day or a couple of sessions. So with a stop loss of 5270, keep your long positions in Alchem for targets of 5380 to 5400. The other one would be a buy in IEX. IEX also I've recommended in Prabhudas Leeladhar at the same levels, 184 half, 185 trading in futures. With a stop loss of 182, I believe the stock is very well placed for the rally towards 195 to 200. The option writing at 180 is very strong, so I believe that will act as a very strong support zone. So from here, the rally should resume for targets of 195.
Right, hang in there, because we were just talking about sugar stocks and them not moving, alone and in tandem with others. So you just pull up. We were talking about Balrampur Chini, but see Shri Renuka. Look at Dwarikesh Sugar, Bajaj Hindustan. All of them now have moved to the high point of trade. So Shilpa, do you have any call on this space right now? Is there any stock that stands out? Typically, it moves in tandem.
We have been from a technical desk, Dwarike Sugar, they have been recommending, but from FNO, Balrampur Chini is there. Yes, of course, it has just given a breakout again above 420. So as long as it is holding 420, I believe stock can move towards 445 to 460 zone.
All right, Shilpa. Thank you so much for joining in, giving us your call on the indices, individual stocks and some sectors as well. Before we move on, just pull up the intraday chart of Bombay Burma. That's the other stock which has seen a big move. In fact, it's up now 13%. Volumes picking up on that one as well. In fact, today's volumes on Bombay Burma are much higher than what we typically see on the stock at this time of the trading session. So that's something we'll just keep an eye out on. Bombay Burma up around 13%, 14%, Nigel.
Well, big move is what we're seeing on that one, bursting away actually up close to around 14% odd. For the time being, let's shift focus to our special segment where we get you a few ideas for profit from Money Control Pro. Jitendra Gupta of moneycontrol.com joins us to talk about a stock that he's tracking closely. Jitendra, take it away.
Among utilities, we continue to like NTPC, which still offers good value given its reasonable valuation and strong earning visibility. Of course, renewable energy modernization plans the company has. Earnings visibility is quite good, supported by robust capex pipeline and improving profitability, largely led by lower fuel cost and generation efficiencies. The company plans to tender close to 15 gigawatt of thermal capacities over the next 2 to 3 years. This is in addition to 10 gigawatt of thermal capacity currently under construction. Additionally, NTPC's renewable energy capacity targets are ambitious. It is aiming for 20 gigawatt by FY26 and 60 gigawatt by FY32. We think additional thermal power capacities will expand NTPC's regulated equity base, providing reasonable earnings growth visibility. Moreover, our focus on scaling renewable energy portfolio and exploring new areas such as green hydrogen and battery storage should support growth. These initiatives are expected to drive earnings over a period of time. Valuation wise, NTPC is trading at around 1.8 times its fiscal 26 estimated book value. This is reasonable given strong long-term growth prospects, healthy dividend yield of 2.5%. Moreover, NTPC plans to list its renewable energy business soon, which should further unlock value.
All right, that's about NTPC. A couple of these auto stocks doing extremely well. And before we slip into a short break, just pull up Bajaj Finserv as well. Will be an important one to watch out for, particularly in the second half of trade. Bajaj Finance, Bajaj Finserv, HDFC Bank on account of the Nifty Financial Services expiry. We take a short break, come back at you more on the markets and a lot of individual stocks which are buzzing around today. Welcome back. Let's talk about one of the other stocks which are buzzing around today. We have CSE, that's higher in trade as it's hiked tariffs in the Kolkata circle by over 5%. Vivek joins in to tell us more. Tariffs hiked by 5%, stock up by 6%. Vivek.
Well, that's right. So when you're actually talking about CSE, remember, the company is largely present as far as the state of West Bengal is concerned. And we are talking about the Kolkata circle, where the company actually offers electricity services. Now, for a long period of time, CSE has been requesting, for two sets of developments. Number one, they've been asking for a tariff rate hike, which has not yet fructified. Also, the company has been asking to go ahead and levy a charge so that they can go ahead and recover the variable charges. So now, when you're looking at the bill for the month of June, what's actually happened is that the company has started to levy a fuel adjustment charge to its consumers. Now, this fuel adjustment charge, the quantum of that is rupees 40 paise per unit, which effectively works to a tariff hike of 5.7%. Now, what IIFL says with regards to this particular development is that this particular hike should be good to cover CSE's incremental fuel costs and ensure complete cost recovery. They also say that the accumulated regulatory assets stay at 3,000 to 3,500 crore and will be recovered gradually with regulatory approval. From the stock's perspective, this is a significant development given the fact that the stock continues to trade at a steep discount to Torrent Power, Tata Power and Adani Power. They believe that this particular hike can go ahead and help the company catch up in terms of valuation multiples to its peer set.
All right, Vivek, thanks a lot for that. So that's about Affle, which is, that's about CSE, which is doing well. But let's talk about Affle as well. That's the other stock which is higher. And Rima joins in to tell us about the initiating coverage that is coming from Citi. Rima.
Thanks so much for that. So first, just a quick word on Affle India. Now, Affle India is an ad tech platform which helps with your mobile and digital marketing. So basically, if you are an advertiser and you want to sell your product, you will contact Affle and give them a share of your marketing budget, and they will help you gain customers or users. So now Affle India focuses on 4 key segments: E, F, G, H. E stands for e-commerce, edtech, entertainment. F stands for fintech, FMCG, food tech. G stands for gaming, groceries, government. H stands for healthcare, hospitality, travel. Now, the company did go through a bit of a slow patch because of the funding winter for many of the startups, and therefore they had gone slow on user acquisition or customer acquisition. Then even the GST on gaming had hit them because they do cater to gaming also. But now Citi has come out with a note, and they're saying that the company is a beneficiary of increasing digital and mobile ad spends. Some of the strengths of Affle, and these are noteworthy considering that they are competing with the likes of Google, Meta, Amazon and Apple in this particular space. They're saying that Affle India has a connection with over 3 billion connected devices. They have partnerships with mobile OEMs like Samsung, Xiaomi and other mobile operators, which allows the company to directly communicate with the device. They're also allowing enterprises, that's your advertisers, to directly help in advertising in regional languages in India or come up with personalized ads, largely more in tier 2, tier 3 cities. And their M&A track record has also been fairly decent, and that's helped them gain inroads in the developed markets only. So they have diversified away from India a bit. So Citi has initiated coverage. It's a target price of 1600. They expect the top line to grow ahead of the industry growth rate. They also expect margins to expand by 300 basis points from 16% to 19%, and they go on to say the valuations at 47 times is below their long-term average of 56 times. But remember, just as a noteworthy risk, they are competing in a crowded space where the likes of Google, Meta, Apple, Amazon control 70% of the digital marketing spend. Back to you.
Got it. All right, Rima, but stay with us. Brokerage house Bernstein as well has expanded its coverage on IT sector. They've added a couple of engineering services companies. Tell us more. What do they have to say?
Well, let me start with KPIT Tech because that's a stock reacting positively. And this is a stock which is up nearly 600% in the last 3 years. And it's vastly outperformed its closest peer, Tata Elxsi, which is up 63% in that same period of 3 years. Now, Bernstein has initiated coverage on KPIT Tech. They've got an outperform rating target price of 2,120, so much higher than the lifetime high of KPIT, which is 1774. The key reason is the company is a dominant player in the auto space, in auto engineering, in areas like electrification, ADAS, body electronics, and they're servicing large OEMs like BMW, General Motors, Cummins. But on the flip side, Tata Elxsi, they have a negative call, an underperform rating with a target price of 6,030. They say Tata Elxsi has delivered the slowest growth amongst peers over the last 5 years at 17%. High revenue contribution is a risk. And third, valuation at 50 times forward multiple is expensive. Back to you.
Okay, all right, Rima, thanks a lot for that. Well, Mangalam, coming across to you, FMCG brand Emami, well, they've seen quite a up move after Citi raised its target price from around, I think, 650 earlier. Tell us more.
Well, the stock itself has been doing extremely well over the last couple of months or so, almost 6 months or so. It's been a big 70-80% sort of mover. So maybe some bit of that is also, playing out. But for Emami, the pictures, the pieces of the puzzle came together when they depledged the promoter holding. Then they also, started to scale up some of their acquisitions. Then there was a strong winter, the extended winter that came by that did well for their winter products. And now the summer is doing well for them as well. So seasonality is helping companies like Emami. Citi has gone ahead and increased the target price from 625 rupees all the way up to 900 rupees. They see tailwinds in the form of one strong summer season, which will benefit both Navratna hair oils as well as Dermicool. Dermicool was something that they acquired a couple of years ago. So this is going to be the first full summer that will be there in the numbers this time around, potentially above normal monsoons as well. So winter did well for them, summer is doing well for them, and now with above normal monsoons, maybe rural, picks up for them as well. And over the long term, however, a couple of these strategic initiatives that the company has been doing, increasing its sales and distribution force, they've added a couple of people on their management board as well. The tech digital things that they're doing along with organized channel, which is modern trade and e-commerce, which contribute to about 20% of their sales with new product launches and higher ads and promotion spends. As a percentage of sales, Emami has the highest A&P in the industry itself, and despite that, they have among the higher EBITDA margins too. So all these working for the company, they expect there to be a bit of a re-rating. You know, about 6 months ago, the stock was trading at around 26, 27 times 1 year forward earnings at a time when everyone else was trading at 50 plus. So with valuations catching up as well, now the stock is up 70% from those levels, still at a discount to all the other FMCG peers.
All right, and Abneesh in the morning as well said that he expects further upside even from here, even after the re-rating that we've seen. That Citi's call as well on that stock. Big move, as Mangalam said. Just pull up a 3-month chart. You'll see the way the stock has given massive returns. I recall it at around 450, 500 rupees. Now at around 775 rupees. 70% in 3 months. Slip in a short break, come back. We'll continue our focus on markets and stock-specific action. Welcome back. Markets are doing well, but a couple of stocks are calling for special attention, and Sonal's here to address just that. Mahanagar Gas went ahead and increased prices. Sonal's here to tell us about that price increase, why did they do it, and the implication. Sonal.
Well, it's an important update coming in from Mahanagar Gas. They've gone ahead and increased CNG prices by 1.5 rupees per kg, and your domestic PNG is more expensive by 1 rupees per SCM. CNG price now in Mumbai and the areas nearby 75 rupees per kg. The PNG price is 48 rupees per SCM. The company says it is because of 2 reasons. There is a shortfall in domestic gas allocation, and second, the gas that they're importing on because of this reason is much more expensive now. Now remember, spot LNG prices are up 11% on a month-on-month basis in the month of June itself, thereby increasing their raw material costs. Now, with this price hike, the gross margins for MGL could be around 17.9 rupees per SCM. This is the highest in the industry itself, and the stock trades at a cheaper valuation, the cheapest in the city gas distribution space. It trades at 12 times versus IGL trading at 19 times and Gujarat Gas trading at 22 times. So it has the valuation advantage as well. Today, there was a note by CLSA as well on city gas distribution companies, because remember, IGL and Gujarat Gas, both of them also increased prices just few days back. They say IGL's price hike will be bolstering its margin in second quarter of FY25, while Gujarat Gas's price hike for industrial gas will impact its attractiveness versus propane, and this may dilute Gujarat Gas's efforts in winning back industrial volumes. So while it's positive for IGL and Mahanagar Gas, not so positive for Gujarat Gas.
All right, but we're also looking at some chemical stocks as well, right? There is a note that is coming from UBS, Sonal.
That's right. So UBS has put out a note and they speak about the industry trends in the chemical space. They like PI Industries as a stock, bet the target price at 4,800 rupees a share. Naveen Fluorine as well is liked by them with a buy call, target price of 4,250. They have a sell call on Aarti Industries and Gujarat Fluorochemicals. The big reason for the underperformance so far has been Chinese capacity additions, and they say now they may have peaked. So recovery is likely to be drawn out from these levels. Worst may be over because of a couple of reasons. There's stimulus policies in China, which is aiding margin expansion and more demand from that particular geography itself. Producers reducing utilization to improve supply demand. There are capacity addition delays as well, which would mean that not more of exports are happening from China to other countries at lower rates, and somewhat lower inventory over time, which is providing support now to prices as well as demand. Trade war escalation can be a risk, but with some buffers. But near-term demand remains weak. Cyclical upturn expectation in 2024 is receded. And as managements have been saying, it will be the second half of this fiscal when they expect recovery. But some of these stocks have already started seeing in their prices.
Okay, all right. Thanks a lot for that, Sonal. Well, just want to point out these railway stocks. They're a beautiful last couple of days, but some of them have fallen off the cliff, you know. RVNL, just take a look at the high and the low of the day. The stock has corrected more than 10% from the high point of the day. Ircon, that's another stock. You know, high of the day was massive. You know, that one as well has come off close to around 8% from the high point of the day. IRFC, another one that is off close to around 9% from the high point of the day. So quite a few of these names that have seen a good amount of a run-up. They have come for profit taking. IRIDA, not from the related space, the renewable financer. Well, that one as well has suddenly slipped from the top. The high, I think, was 250 rupees, 254. It's at around 237 odd.
Yes, Nigel. You know, same is the case for some of these shipbuilders as well.
Yeah.
We're looking at Garden Reach shipbuilders down about 6% from the highs, Cochin Shipyard down about 5% from the highs. And these are stocks that had seen like 11 to 30% moves all of last week. So maybe some bit of profit taking is on the cards for all these high-flying stocks that we just spoke about. But with that, what we'll do is take your leave on this edition of Chartbusters. Thank you so much for watching. From Nigel, me, the entire team that puts this show together, thank you for watching. Take a break. On the other side, we'll have the team of Trading Guard come up next.